Internal Revenue Service IRS Tax News. Who can get more economic impact payment money for children? COVID Tax Tip 2020-46, April 28, 2020. Millions of Americans have already filed for their economic impact payment as the IRS continues to automatically send payments to more individuals. Eligible taxpayers who filed their tax return for either 2019 or 2018 will automatically receive their payment. The IRS will calculate the amount based on the income, filing status, and dependent information on their most recently filed tax return. So general rule, if you filed 2019, then they're going to be processing that. If you haven't done so, given the fact that they extended the deadline, many people probably have not, then you can file, they'll be basing this thing on the 2018 tax return. And if everything's okay with those returns in terms of how they would calculate the payment and where to send the payment to, then everything should be good. No one needs to do anything and the payment should be processed fine. However, what about those situations when that's not the case? One of those situations could be where there's a dependent or a qualifying child type of situation where more information would be needed. Back to the text. While people who receive supplemental security income and veteran affairs, disability compensation, and pension benefits will receive up to $1,200 automatically, some people in this group with children under 17 can receive up to an additional $500 for each qualifying child and need to act by May 5th to get it. So in other words, they've been saying this is going to be the unusual type of situations. If people are in a situation where they're getting money that is not taxable, for example, from some type of government organizations, such as the Supplemental Security Income and Veterans Affairs Disability Compensation, they've been trying to work with those institutions in order to process the payment, just to get the information they need to process the payment, which is to know that you have an individual, and if that individual is not filing tax returns, the assumption being that they are going to be under the income limitation, and therefore they have enough to calculate, if it's just one individual, the $1,200 payment, and they know how to pay people because they can copy the same process as to where these other payments are going, and they can send it out. However, if there's a situation where those individuals have a qualifying child under 17, then that's that added $500, and that's that area where they don't know. They don't have that information possibly, and they want to be getting that information by May 5th in order to process that plus $500 that they've been talking about. So that's the information and those special circumstances that they've been spending a lot of time to see if they can pick those people up and add that $500 where applicable. Back to the text. People in this group who have qualifying children under age 17 can claim the additional $500 per qualifying child and will need to provide their children's information to the IRS using the non-filer's interpayment info here. So they have a tool in order to do this. This tool should be easier than filing an actual tax return because they don't need the income information. All they really need to know is that you have this qualifying child now. So it's supposed to be an easy tool to be able to give that little added piece of information that they need, not to file a tax return, but just to be processing these economic impact payments. It's a one-time tool, however, not something that they're used to doing. They haven't done this in the past, and they probably won't need it in the future, and therefore it being a one-time tool, it has some ups and downs, so they've been updating it a lot to make it work better. But anyways, if you fall into that group, they want it by May 5th. So you want to get that information by May 5th before they actually process the payments. Back to the text. Individuals who are married must also provide additional information using the non-filer tool to claim the full $2,400 payment if their spouse didn't receive SSA, SSDI, RRB, SSI, or VA benefits in 2019 and didn't have to file a tax return in the last 2 years. So this is one that they haven't been emphasizing as much. So this is going to be a situation where you have two individuals that are married. One of the individuals is receiving one of these payments, these payment informations from a government entity, possibly part of it being non-taxable, therefore they're not filing. But these organizations have their information. Therefore, the IRS has enough information to process their check of the $1,200, right? They process the check. Now, if they're married, but their spouse, if their spouse was also receiving one of these types of benefits, it's quite possible that they would also get a 1,200 check, even though they're married. So instead of the IRS, you would think then, instead of the IRS sending out one $2,400 check to the married couple, they would send out two individual 1,200s, because they would have two individuals that are then receiving some kind of benefit. That's what I'm guessing would happen in that situation. However, what if we have one individual that's receiving one of these benefits, and therefore the IRS would get that information and be able to process the payment, but they have another individual they're married to who doesn't get any of these types of payments and is below the status where they need to file? Well, in that case, the IRS doesn't know that they're married, because that's not, these things aren't going to give that marital status. And since the other individual is not receiving any payment from these organizations, they're not going to get their own, their individual 1,500 that may automatically be sent out. But because they're married, if they had filed a tax return, you would think that the married couple would get the basically, two individual or double the 2,400 for the married joint couple that would see their economic impact payment. So in that situation, they may need more information as well. So again, that situation being one individual not filing, doesn't file the tax return because they don't need to, because their taxable income isn't high enough to need to file, possibly because they're getting payments from one of these organizations that are government type organizations. Therefore, the government organization knows they're at least an individual and will probably be able to process and pay out the 1,200. However, if those individuals are married, the person they're married to isn't receiving any of these payments, then they're going to need to give that information to the IRS, and hopefully that would result in them getting the 2,400 benefit. Back to the text. Benefits in 2019 and didn't have to file the tax return in the last 2 years. Okay, a qualifying child is someone who is the child, stepchild, eligible foster child, sibling, half-sibling, step-sibling, or a descendant of the individual. A descendant includes children like grandchildren, niece, or nephew. Can be claimed as a dependent on the taxpayer's tax return. For those who didn't usually file a tax return, include the child's information in the non-filers Enter Your Payment Info Here tool before May 5th. Was younger than 17 at the end of the 2019 tax year, is a U.S. citizen, U.S. national, or U.S. resident alien, has a valid Social Security number or an adoption taxpayer identification number. Some people have older dependents. This includes people like an individual's parent or college student. Here are a couple of things to know about dependents 17 or older. So as we've been thinking about these dependents, note that the rule hasn't been for a dependent for that added 500, the rule has generally been that it's got to be a qualifying child, basically below the age of 17, being one of the major types of restrictions. So what about those individuals that qualify for a dependent, but they're, for example, a parent, or for example, an individual that's going to school and is over 17, and usually you could still be basically a dependent in that case. So back to the text. Here are a couple things to know about dependents 17 or older. Individuals with dependents 17 or older won't get more money for those dependents. The person claimed as a dependent on another person's tax return isn't eligible for the 1,200 economic impact payment. So unfortunately, those individuals don't qualify. They're a dependent typically, and it looks like the IRS is saying, well, no, we're not going to give the payment for the people that aren't the qualifying child. So that means children that are dependents, or dependents who aren't qualifying children. In other words, the cap or the restriction, the main one being the age restriction. If you have a dependent that's older than 17 and is still be claiming as a dependent, then they're not going to get the 500 for the parents claiming them, it looks like here, and they're not going to be getting the 1,200 individually that they would get if they were to basically be filing separate if they weren't claimed, as a dependent. Back to the text. In addition to those receiving SSI and VA recipients who receive compensation and pension CNP benefit, payments are also automatic for people who don't normally file a tax return but receive certain payments. These payments are Social Security benefits for retirement, Social Security disability insurance, survivor benefits, railroad retirement benefits. So again, the idea here being that the IRS is working with these institutions or these other parts of government entities that are processing these payments, and therefore they should be able to process the payment even in those situations where the tax return had not been processed.